Today we're going to look at what's going on with a certain part of the Magnificent Seven. We're going to look at Tesla, Apple, and see why their share prices are dropping below certain key technical levels. And then the trading takeout today, we're going to have a look at an article that was released by a research firm yesterday, talking about algorithms in the oil market. But what I want you to do today is below this video, I want you to drop all of your questions that you might have, because I want to go through them and answer them with some videos over the next couple of weeks. So make sure you hit the comments, ask me whatever you want about the markets, trading or investing. So a couple of stocks at the top end of the S&P 500 at the moment are getting absolutely trounced. Apple and Tesla come to mind. And I think perhaps in the next month or two, Google is really going to follow. But we've got to look at the reasoning here as to why. And I think it's really, really important to do so. Now, Tesla naturally for a long period there, a couple of years ago, was hailed as the new innovative, company behind all the electric vehicles, all the new technology. And I still think it is that way. But what we've got to really highlight is that narratives move in cycles. Okay, so for a long while, it was the EV narrative. It was Tesla taking the market by storm globally and in the US. But all of a sudden, it's gone to AI being the key narrative. And so what happens is the attention fades from one really, really strong narrative, and then it moves to the other. And we can kind of prove that because Apple at the moment, as I think I've discussed just recently, is sort of not very prominent yet in the AI sphere. And if we move over to look at Apple, we can sort of see how their share price is behaving, very much similar to Tesla's, where it's trading well below the 200 daily moving average and the 20 daily and the 50. So well below the momentum readings that you would like to see it in an uptrend. But if we go back to Tesla, we'll get back to Apple in a second. You can see here that I've had this level highlighted for a long time, and that is basically where it crossed below and closed below the 200 daily moving average, which is in blue. But really, it's a struggle, because if we look at levels closer to here, so if we go down to here and we look at this gap here, for example, we can see that Tesla share price looks very much in trouble, in my view. So we're looking at this as a factor of, okay, well, it couldn't even make it back up to the 50 daily moving average. The 200 daily moving average hasn't even started ticking down yet. And the 20 daily moving average, it broke through it and then drastically came all the way through the mid-February lows, basically. That is not a nice technical setup. And I'm not really a technical trader, but I can understand exactly how people are positioning here, because it seems to me like they're extremely bearish on Tesla and I guess the EV market in general. But it seems almost like it's systematic at this stage. It seems like there's just a lot of heavy selling going on. And I think it is definitely due to the take-up of attention into NVIDIA and all of the AI stocks. I think that is purely what's happening. It's like there's a vacuum that's gone on. And so this is something that we really, really have to pay attention to, because these narratives of the changes in tech really, really can cause massive dislocations, not for the overall market, but for single stockholders. For a long time, people would have been happy holding Tesla, happy holding Apple. And for the moment, at least, that doesn't seem the case. So these companies have to be really super nimble and catch up to the new innovations, new developments for their share price to be maintained. Long gone are the days when interest rates are higher that you can do things like Tim Cook and just do share buybacks, which have led to the Apple price increasing over the last, say, 10, 15 years. We can't really do that anymore. The what's known as the hurdle rate is too high. The cost of capital, or the real cost of capital, is too high now. And so we've really got to focus more on exactly which companies are trying to progress the new technological narrative. And I think a couple of narratives that will spring up soon are nuclear again, hypersonic travel, and also I think the progression with the GLP-1 drugs, so the semaglutide drugs from Eli Lilly, Novo Nordisk, and the pharmaceutical companies like that. They are really going to push forward the boundaries of the health sector, the energy sector, and the travel slash tech sector as well with the hypersonic stuff. So you've got to make sure that you're aware of these narratives in this paradigm, if you like, because otherwise you're just going to get left behind. And so do these companies, you know. So I received this report yesterday from a group called PVM, and they're effectively a commodities house. And basically, the whole report goes through whether a lot of the market movement in oil at the moment is to do with algorithms or humans. And they're basically saying that everything's to do with black box trading, which is high frequency trading in oil futures. And there's very little physical actually going on right now, which is, excuse me, fine. However, this is a key thing that I see all over the market, and it is that people are constantly complaining about algos, market makers, all of this kind of stuff, when in actual fact, it's got nothing to do with them, really. They might have something to do with when a flash crash perhaps happens because these algos and automated market makers step out of the market. However, they are not to do really with the day-to-day movements. There's no conspiracy, there's nothing like that. And I think it's very, very important to remember that just because something sounds complex doesn't mean that it's the reason for why you can't trade well. You know, just because someone sounds like they can do things on an ultra fast timescale, it sounds like they've got so much money, doesn't mean that that is the reason as to why you as a retail trader are losing, basically. So you're even seeing from this perspective that larger research houses and commodities houses like to sort of come up with excuses. Now, they do at the start say it's hard to step into the controversial argument of the function of what used to be known as black box trading, but then they go on to say all the stuff going on is down to algos. So try not to get down the rabbit hole of believing in, you know, the world's against you with trading, because it's not. And generally, it's easier to take responsibility for your own mistakes and try and correct them over time.